Position your portfolio for 2025. This is about the 9th or 10th, I should have counted time I've done it as the final power hour for the year. I will make a whole bunch of bold predictions. Those are for your account. But what I do more importantly is I will start this evening by going back to the predictions I made a year ago and looking at them to get a sense so we can see how good I am or aren't at the predicting story. I said top 40 would be higher, including dividends. It's about 18%. I thought the rand would be stronger. Man, and there was a point today where I thought it might actually get stronger. So I'm busy buying dollars. So how do you make the rand stronger? Well, you get Simon to buy dollars and then it goes stronger. So I bought dollars and it did. It picked up 10 cents, but it's still about 4 cents weaker than it was a year ago. I said load shedding would be ongoing. I'll talk more about that. There are a few happy surprises in the world, and one of them was 5 a.m. 26th of March. Transnet's still a problem. Transnet's a long-term problem. We're going to hear a lot of talk. It's not going to get solved in a hurry. I said rate cuts, but I said by mid-year. So yes, we got the rate cuts, but they came September. If you remember, and it's weird to Adishan's point, if you remember this time last year, the US was betting that there would be 6 or 7 rate cuts starting in January. And they started in September. And the market doesn't seem overly stressed by that in the least. We will talk about that. I also said Prime would get to 11, and it got to 11.25. I'm going to come into that into more detail. Russia, Ukraine. Russia, Ukraine's important geopolitically. It's very important for Europe. 2 reasons, wheat and energy. But we'll talk more about Europe as well. I expected oil higher. We now know why oil isn't higher, because India buys Russian oil, processes it, and then sells it to Europe. So Russian oil hasn't left the market. It's just making a curious route to market. I expected the US to be green, both S&P and NASDAQ. I said China would struggle, GDP under 5%. And again, let's remember a year ago, we just had the 3rd election of Xi Jinping. They had just ended their zero COVID policy, and Xi Jinping issued a document and I said this before, if you want to know what's going to happen in China, go read Xi Jinping's 5-year plan, because he tells you, and then he does it, because it's China. Like, this is not a, and in that plan, he talked about things such as common prosperity is achieved, which was all the crackdown on education and tech and everything. There was a lot of enthusiasm for China, and it's failed. Gold at all-time highs, and I think that continues higher. I am long gold. It remains a weird place to be, but so be it. And I said no recession. Again, remember the hard landing versus soft landing versus it turned out no landing. A year ago, the consensus view was recession, and here we are, no recession. And truthfully, not even particularly close to a US recession. So fairly good on the big stuff. I then throw a bunch of stocks out, and this is my favorite screen of probably 10 years of presenting. I've never had all green in my entire life. Every single stock was green. Usually there's some red, right? Because that's to try and keep it real. My ShopRite was consumers. My Pepcor was consumers. My logic is that we would start seeing inflation down, we'd start seeing rates down, and consumers would be in a better space. I stress better, not good, and they certainly are. And I thought that the stocks would do well. Pepcor 60%. These include dividends, is nice, but that's not even the best in the retail space. The Finnies, I like banks. Zeda disappointed. I thought we'd get more out of car hire, Avis, etc. That's Zeda, the car company, not the agri. Gold, Goldfields. Interesting story there, and I'll show you a chart. But just because gold's up 26%, Goldfields couldn't manage. Well, they got 1%. Property 34, and REIT up 36. I liked property. I didn't expect that level. Europe up 3%. I just want to give up on Europe, man. Like, I mean, I love the cheese, I love the wine, pizza, chocolate, but not Europe. Afrimat up 26, Richemont up only 8. That was probably, if I wasn't so big on China, I shouldn't have been so big on Richemont. And top 40 up 18%. Non-COVID, that is the biggest number in over a decade. That's a big number. These are all including dividends, but 18% is a big number for the top 40. So we will absolutely take it. What I then do is every year, the day before this presentation, I go on the Twitters and I say to folks, what did you expect? This is what I asked you last year. 51.6% said the market would be green. They were right, very green. But that difference is the closest I've ever seen it before, which shows that level of uncertainty. I went yesterday and asked the same question, and that gap is the biggest I've ever seen. I'll be honest, it bothers me. You know, when everyone's going one way, my natural instinct is to go the other way. They're zigging, I want to zag. That anyway, folks are bullish. We'll see in a year how it goes. So some burning questions, and we start with Eskom. 260 days ago, March 26, 5 a.m. I don't remember it, but what would have happened is my phone would have beeped me because at 5 o'clock in the morning, I'm having my first coffee and cigarette, and my phone would have beeped me and said load shedding suspended, and I would have been yeah until lunchtime, and it's never beeped since. 260 days. There are a couple of reasons why. Our economy hasn't grown in about a decade, so there's no extra demand. A lot of you have put solar on your rooftop. If you have put solar on your rooftop, you need to change the setting to change it from load shedding to power saving. I don't know how to do it, but there is a setting, trust me. What's happened is industry's gone and built capacity. The mines, the shopping centers. I live next door to the mall here, and if you look down, the entire roof is solar. And that's, you know, for a shopping mall, that doesn't give them, only gives them about 30% of their required needs. But of course, the mines have gone really, really big on it. And it's not just because they want security of power. They do. They also don't want to pay 36% increases. Frankly, solar is just cheaper and it's got a way quicker payback period. So Eskom has fixed itself. So every time for 5 years in a row, and I went and checked this one, I've had this slide, and then I click a button and it would turn black. And now it turns white because we have lights. The importance of this. So first question, is load shedding over? I mean, Eskom said we would have load shedding during winter, and we didn't. I mean, is it over? There is a chance that we will get some low-level load shedding at various points into our future, sure. That stage 4 and at point stage 6 load shedding, where your power is off more than it's on, that is probably behind us. And the importance is humongous, not only to individuals. It was soul destroying. It was, I mean, it was really tough to, you know, I live in an apartment building. Yes, it's got a generator, but it takes 30 seconds to kick in. If I'm in the lift, man, I don't like lifts on a good day. I mean, I don't know what happened, that sort of thing. And then, of course, just the practicalities of, I don't know, making dinner for a family with young kids at load shedding time, all of that stuff. For business, it is a fundamental game changer. SARB, Reserve Bank, estimated that load shedding was costing us 1 to maybe 1.2% of GDP every single year. Think about if you're a business in South Africa and you want to expand and you need power. Well, first, you've got to factor in providing your own power, which adds cost to it. Imagine you're a foreigner and you're looking at countries to invest in, and you get to South Africa, no security of power. Next. You don't even bother, you just move on to the next on the list. And it's really silly to have to say it, but power is important. Who knew, hey? Eskom didn't. So Eskom's back, and I mean, largely, I think they are back. Yes, we'll get, I mean, the problem in Joburg is no longer load shedding. The problem in Joburg is aging infrastructure. So things fall over. So the good news is that we're back there, and we've got a GNU, Government of National Unity. And lots of weird stuff happened. So it was 16th of December when former President Zuma launched the Umkhonto weSizwe Party, MK, which has fundamentally turned our politics on the head in that it has broken the EFF. They no longer, you know, they're fourth nationally. They are being eaten by themselves and MK, and the EFF is now over. The weird thing is that our next national election in 2029, my sense is MK will be over. So where's our left party? We don't then have a left party. Now you might think that's good. No, you need balance. We've got the centrist, which is ANC. We've got the slightly right, which is DA. We've got some far right. We've got the SACP contesting municipal elections in 2026. So we've got far left. We need that slightly left party. And I don't think we'll have one in the next national elections, but that's a problem for 2029. The key thing about the GNU, in my mind, is not the fact that the ANC got 40%. It's the fact that the ANC got 40% and said, awkward, let's talk. Instead of saying the election was rigged, let's raid the capital. Instead of doing what's currently happening in Mozambique and many other parts of the planet, because there were more elections this year than there's been in any single calendar year in the history of the world. And incumbents got beaten left, right, and center in elections. It's a fact. Now, as South Africans, we knew the ANC would do that. Why? Because we saw it happen in the city of Cape Town in the early 2000s. We saw it happen in the Western Cape as a province in the late aughts. And there's some exceptions. I know you're thinking Joburg, and I try to count how many mayors we have, and I don't know. Ekurhuleni, Tshwane, I think Nelson Mandela Bay, eThekwini. The councillors aren't going easy. But as a party, the ANC respects democracy. Now, that should not be a surprise to anyone who knows South African politics, who is a South African, or who's ever known anything about the ANC. On the grassroots, maybe not, but as a leadership, they respect democracy. But the rest of the world didn't know that, and now they do. So when they're running down their list of things to invest in a country and political stability comes up, they say, South Africa, it's a tick. And that's a big tick. Doesn't happen in a hurry, not going to get us money next week. But the fact that the ANC just said awkward, and let's be clear, there's going to be fights. And let's be double clear. When you see a Sunday paper with a headline about the GNU about to collapse, that's not about the GNU about to collapse. That's about someone trying to collapse the GNU. They've leaked stories to the Sunday Times. Sorry, I never said that. A Sunday paper with the sole intent of trying to collapse it. Just saying. So we got a GNU, which is lacquer, and they're weird animals. I mean, they need a day in the sun. I mean, look at them. They look a little confused now that everyone's like staring at them and yelling, hey, GNU. Anyway, we've got a GNU, it's functioning, it's epic, and we're seeing tangible results. That came out, that's from News 24 yesterday. It was on Bloomberg News, the South African Chamber of Industry and Commerce do a confidence survey, and it is the highest since 2015. Not the highest ever, but the highest since 2015. There is a tangible sense of, hey, something's a little different here. It is GNU, it is Eskom. With one or the other, would be less good. With both working, it's quite a wild place to be in South Africa right now. Quite lacquer, except for the heat waves, but we'll manage the heat waves. There is, of course, we're South Africa, so let's not get too excited. Hello, new crisis. Residual Waters Highlands project was supposed to be finished. Phase 2 was supposed to finish in 2020. They started it earlier this year. Fun fact, first you build a little dam, and then you build a big dam. They're busy building the little dam. They've also shut down the pipes while they do maintenance on the pipes. We were supposed to have phase 2, so that when we did maintenance on phase 1, we could run on phase 2, but phase 2 wasn't ready, so they just shut down phase 1 pipes. It's going to be fun in Joburg over the Christmas period. Water is our real challenge. We are a dry country. That just goes without saying. We have aging and creaking infrastructure, and we have incompetence running our water infrastructure. It's about the politest thing I can say. The problem is, power was moderately easy to solve. I had a gas cooker, I got a USB light, I'm okay. Water, like, I used to live down at 44, and water would go for 3 days. And by the morning of third day, I would say to my wife, if water's not back tonight, we're checking into a hotel. I can't solve the problem. I mean, I can go and get buckets and stuff, but there comes a point where you can't. This is going to be a significant challenge. For us as individuals, you need JoJo tanks inline. In other words, municipal water comes into JoJo tank and then into your house. And when municipal water turns off, it just goes into your house, and when it comes back in, it fills in again. It's cheaper than solar, but you need a lot of space. Can't do it in my apartment. Business has to do it. We've seen Impact bought a water tanker company. Mall of Africa is installing 5 days of water backup. But 5 days of water backup is a huge expense and a huge operation, and only 5 days. That's the difference between water and power. This is the real crisis. And it is coming. It is absolutely coming. So let's look at some local indices. Satrix Resi up 1%, resource stocks. Let's start at the top. Satrix Pro. So the property is up 34%. This is excluding dividends. We've got the Fini up 27, the mid-cap 20, India up 19, and the Satrix up 16%. Satrix got massively dragged down by the resources because resources is a large part of that top 40 index in this day and age still. What we have here, and this is year to date, this is not for the 1 year, is apart from those resources, everything did great. And of course, within those resources are gold stocks, which apart from Goldfields did great, and then everybody else who, well, didn't do so great. But it has been pretty much across the board a place to make money this year. I mean, it almost didn't matter. Look, there were different types of places to make money. There was more money for some than others, but certainly the market had a spectacular 2024. And this is, I mean, if I do this international, and we'll look at some US markets in a moment, these numbers are amateur stuff. I mean, let's be clear. NASDAQ and S&P 29% for an index is just staggering. The question then is our market still cheap? So this is Investec work. This is looking at SA Inc., which is banks, food and drug retailers, food producers, general retail, non-life insurance, telecom, Vodacom, life healthcare, Netcare. So it's very much the SA Inc. It's not the miners, it's not the multinationals and the like. And what you can see, this is going back 20 years, is the massive decline and then a significant rally, which has taken it above the average for that period, 20-year period. So then folks will say, the market is expensive. Sure, except let's add 10, 15% growth on top of that. Suddenly things aren't so bad. Our market is not expensive by any stretch. I'll show you expensive in a slide or two. It's run hard, and certainly the next leg up is going to be slower, longer, and maybe not as high, but this isn't over in my sense. It could be. There's a lot that can derail it, but there is a sense of positivity in the market. Interestingly, foreigners have been buying our bonds, not our equities. When the foreigners start coming for our equities, things are going to get crazy. Now, I don't know that they will. I don't know when they will, but foreigners will buy Costco on a PE of 50. They'll buy Walmart on a PE of 40 and say it's cheap. We look at ShopRite in a PE of 28 and say, I can't pay 28 for a retailer. Are you people crazy? And Walmart's doing single-digit growth, and they'll pay a 40 price earnings for it. So when they finally decide that our market looks attractive, it's going to get crazy on our market. It's going to get bedorned crazy. Of course, they might not. They might decide they don't like us. They might go to Brazil instead. They might go to India. Maybe Ukraine war ends and they go there. There's a lot of places for foreign investors to go. If they do start arriving on our shores, things, I mean, I remember the late 90s when the foreigners decided South African or EM banks were the best thing to own. When our banks were up 30% a year, 4 years in a row. So US markets. This is year to date, S&P 28%, NASDAQ 27.67%. Staggering returns, considering we had plus 20% returns last year. So here is the dispersion of returns. You can see that the average return, or the most frequent return is actually 10 to 20. The most average return sitting in that group there. There's 24, there's 23, there's 21. 22's down that level down there. We have had 3 of the last 4 years, I appreciate post-pandemic, because somewhere lurking down there is 2020 as well. We have had some crazy years on the US markets. And a lot of it has been Mag 7, Magnificent 7. There has been more late this year, some move into some of the mid caps, small caps. We can see that in the Russell 2000, but it's mostly been Mag 7, and that Mag 7 is AI, artificial intelligence. The poster child, NVIDIA, by 100 miles. And you know, NVIDIA revenue is almost easy to spot. Go look at what Meta and Microsoft are spending on CapEx. And trust me, 90% is just buying their new NVIDIA chips. Not Amazon, they're making their own chips. But of course, Microsoft is buying for OpenAI as well. It's just, you know, you see, Meta spent $5 billion on CapEx. Well, thank you, NVIDIA, for another $5 billion in a quarter scenario. But we'll come to that in a whole lot more. The point is, so These charts are busy. Let's look at the left at the top. We're looking at the price earnings for the S&P 500. The blue line is historic. The orange line is future earnings. And then below that, the purple line is price to book. Book is net asset value, breakup value. This is 10 years of data. You will notice we are high. The right-hand side is NASDAQ. You will notice we are high. But there's more to it than that. Let's look at these assumptions. The assumption is that the PE is going to drop from 30 to 24, which says 20% earnings growth. That's a lot for the S&P for next year. I don't expect 20% earnings growth. On the NASDAQ, it's going to drop from 42 to 28, which is about 32% earnings growth on the NASDAQ. That's a lot of growth, a huge amount of growth. The problem is that the mean on the S&P is 24, and if it does 20% earnings, the PE drops to 24. In other words, it only gets to fair value. In other words, if S&P earnings go up 20% and the index remains unchanged for a year, it's at fair value. And I don't think any of those things are going to happen. I think this market's expensive. Short answer is I think we're going to see some weakness in US markets, perhaps in the first half. I'll come to it in more detail in a moment, but I think we're going to see some weakness in the US markets, not 20% downs, not collapses, none of that sort of thing, but definitely some weakness, and then we will sort of get back to some sort of level of normality. Hang me a second here. I hate it when it does that to me. Sorry, GoToWebinar is my second worst piece of software in the world. I say second because there must be a worse one out there. I just don't know what it is yet. I haven't met it. So I think US markets are expensive is the short answer. Here's the Rand. It's actually now 1782. I told you want to move a currency, ask me to buy some. We bought it 82 and now it's 72. I'd expect it stronger. I still think, so the Rand is mostly about the dollar, and this is the dollar index. And the dollar index, when that was down there at just over 100, the Rand was 1704, and then it rallied up to about 1850, 1860. And it's been surprisingly strong while the dollar index has been at those higher levels. If that dollar index comes back to the 100 level, that takes our Rand sub 17, or other things being equal. Our Rand is broadly driven by two things. Most of it is dollar, and then about a third or a quarter is what we do. Remember midnight firings of finance ministers and stuff like that. So I think we can still see more improvement in the Rand. Why? A couple of reasons. If you want to buy something in South Africa as a foreigner, first you've got to buy the Rand. And what are you buying? Well, at the moment, you're buying our government bonds. Why? Well, because they're paying you 9%, risk-free. We're not going to default on our bonds. If nothing else, we own the printing press. We can just print up some more Rands and pay the debt. I know inflation and stuff like that. But this, if you look at the topping patterns, if you look at the chart, I think 1680 on the Rand next year is easy. I think longer term 1550 is possible. And there's a lot that can go wrong with that statement. Some of it could be internal, some of it could be external. But I think we're seeing a stronger Rand. And I do think that whilst foreigners might not come en masse for our listed companies, at some point they're going to start buying some of them to some or other degree. We also, I think, going to see potentially more delistings coming from foreigners. Announced today that the Saudis and CEOs going to be buying Barlow World. I think we're going to see a bunch more of those happening in our space as well. Inflation. So November inflation came out this morning, 2.9%. October was 2.8. The excuse both times is, but petrol. Okay, so what's happened is petrol price has been steadily coming down, not so much November, December, but it's been coming down. And of course, there's base effect built into it. But we've also got food inflation down. I think for the October thing, I think food inflation was 0.3%. Food inflation's largely disappeared. The biggest risk to inflation is Eskom and municipal rates and levies and stuff like that. That's our risk to it. Of course, our SARB has a target of 3 to 6%, and you wouldn't know it. If our inflation target was 3%, which it should be, and I'll come back to that in a second. If our inflation target was 3%, you would think the SARB would be aggressively cutting. Instead, our inflation target is effectively 4.5%, because the governor doesn't care about the band. And we've had two measly 25-point. Why? A couple of reasons. One, there's a worry about getting too much of an interest rate differential because it'll see money flow out, and that'll weaken the rand, and that'll import some inflation. There's a sense that we made a mistake 20 odd years ago when we put a 3 to 6 band, that we should have done a 3% target inflation rate instead, which is what Chile did. And if you look at what it did for them, it made a far superior economy because of, I mean, short answer, lower inflation is good, right? And then, of course, the SARB wants a 3% inflation, and that discussion is happening. And you change the inflation target in a cutting cycle. You can't do it in a raising cycle or a holding cycle. You can only change it in a cutting cycle. If SARB suddenly tomorrow said, new target 3%, well, it would all be fine. We wouldn't have to raise rates or anything because we're sub 3% already. There's another sense which I think we're trying to do. Understand that central bankers the world over have two instruments, and both are blunt. Interest rates and words. I mean, literally, words. And what they're trying to do here is set inflation expectations low, very low. Not so much for you and I, but certainly for government officials. Biggest, yeah, the government wage bill is create that mindset, break that expectation of 6, 7, 8% salary increases, and start having those conversations around 2, 2.5, 3% salary increases. Unfortunately, it hurts everyone in this room with debt. No short way around it. And I don't think the SARB is going to change their stance. I really don't. I mean, why now? Why capitulate now? It would just make no sense whatsoever. US inflation, weirdly, came in this afternoon, also for November at 2.8. So there was a short window of about 4 hours, 5 hours, where our inflation and US inflation was the same. Window closed, we've all moved on. South African inflation, I'm happy. We've broken it. It's at the low end of the range. There's a very real chance that we don't see 6% again in our lifetime. Very real chance. And that's good news for anyone. US inflation, I'm a little less sanguine about. I'm perhaps a little more concerned about US inflation. Their target is 2%. They're not yet there. We have taken our target and smashed it and come out the other side and are still going. The US at 2.8 is a little bit away from their inflation target of 2%. And I think they're going to be a little bit cautious because we have an orange one happening on the 20th of January. At least this time he goes in via the front door. And if he does half of what he promises, it's inflationary. If he wants to deport 11 million illegal immigrants, let's forget all the logistics and everything else about it. You throw 11 million people out of America, that is inflationary. Because most of those 11 million people are doing work that is not easy to find people for. They are illegal immigrants picking fruit and vegetables and all those other bits and pieces at wages below minimum wage. They also cost your country nothing. Immigrants don't do crime because they don't want to be arrested because they'll be thrown out. Immigrants don't go and get health care because they don't get arrested and be thrown out. Illegal immigrants are cheap labor, is the honest answer. And if Trump wants to break that, I mean, he's the president, it's his call, America voted for him, but they're going to lose cheap labor. That's inflationary. And then, of course, economics 101. No, I lie. Economics 0. Tariffs are inflationary. Like, there's no discussion on that. Now, is he using tariffs as a stick to beat people, or is he honestly planning to do tariffs? So far, the evidence says it's a stick to beat people. But I mean, I'm not betting anything on anything there. Absolutely anything could happen. Here's our prime rate, 11.25. The gap between prime and inflation is the biggest it's been in 20 years. Dr. Roelof Botha, independent economist, comes on my show from time to time. And man, he rails against the governor and his, truthfully, grinches of MPC members. It is the biggest gap. That could easily be 10. I mean, there's a compelling argument to say it should be 10, except it's not compelling to our MPC. Here's our 10-year bond, significant breakdown, trading 9.1. This is important. The money we have already borrowed is at a rate, and that rate doesn't change. But our government does bond auctions every single week. And earlier in the year, they were doing bond auctions and paying north of 11, and now they're paying a little over 9. Basically 2 percentage points cheaper on debt that we are borrowing, and that is material when debt is a significant part of your budget every year. RSA retail bonds, I always put that up there. You're getting 9.75 on the 5-year. It's not as exciting as the 11.5 that we had at one point this year, just before the GNU arrived on the scene. But the inflation-linked bonds are nice and chunky. How they work is your capital increases by the inflation rate, as determined by Stats SA, and you then get the coupon of 5.25 or 5.5. The bad news is both are taxed as income. So it's you got to be super smart, and I haven't worked out how to solve that tax problem yet. Here's our GDP, and it's quarterly GDP, but annualized out. It has been, if we remove the crazies of the pandemic, it's been a long time since we were even slightly at 2, and we've got to go all the way back to Manuel Mboweni and Mbeki running our economy since we've had GDP growth of around 5. This is what we need. If we want to get rid of 30% plus unemployment, it doesn't happen without this sort of level of GDP growth. At least we've got some things coming right, for example, power, which does give us a little bit of an edge in that regard. We are, of course, as I keep on forgetting, junk status. Not 1 notch, not 2 notches. Well, yes, 2 if you're Moody's. We are 3 notches into junk. We have had some upgrades from stable to positive, which means that the next move is probably a move up. I do think that we will get an upgrade probably from Fitch and S&P, maybe even next year, when then we'll be only 2 notches under junk. So the junk status is not going away. Grey listing. It was February last year we got grey listed, and there's a plenary in June, late June, early July, where our status will be reviewed, and I think there's an excellent chance we get lifted off. There are basically 3, but when we got grey listed, there was a list of 26 reasons. We're down to 3. And that's important. There are not a small number of asset managers out there who are not going to put money into a country that's grey listed. Let's put it the other way around. You've got this great destination for me to invest into, and you tell me it's grey listed, and I'm like, nah, thank you not. I mean, awkward because I'm also grey listed, but apart from that, we get off that, maybe foreigners start looking at us again with a bit of interest. Two-pot system is here. It is happening. It was expected to be 40 to 60 billion, but we hit 35 billion in the first 10 weeks. Alexander Forbes' results of last week, or was it week before, said that they are seeing withdrawals at twice what was expected. Folks are pulling out their money. They say they're spending it on debt. Let's take them at their word. Where we know it's also going is into retail. We've seen the Mr. Price update, which was modest, but the period post-September was excellent. The Pepcore results was modest, but the period post-September was excellent. Peeps are spending. They are absolutely spending. It is long-term a really, really good system. Remember that you can now withdraw 30% of all future contributions. So post-September, if you put another 300,000 into your retirement, well, you can yank 100 out. And some people, self-employed, decide what they put in. Many people, employed, it's just automatically put in. I think we're going to, this to me is it's almost like a lubrication that's happening to our consumers to spend. And it's kind of upped the game just a smidgen. Keith did a power hour last month talking in part on two-pot and what he likes about the two-pot. And then we had data out this afternoon. South African retail sales year on year for the month of October, 6.3% up. Previous was 0.9. I don't know that they are spending on debt, eh? I don't know. I mean, we will look, every survey that's been done, folks say debt. Actually, we had the bank, Nedbank, actually said that impairments are looking better. They had an update, was it yesterday, today? They said impairments are actually looking better at a faster rate than they thought. So maybe people are paying debt. We shall see. Here's where it's going, right? Mr. Price, 93% excluding dividends. Foschini Group, 56. Truist, 52. PEP, 51, excluding dividends. These are year-to-date numbers. I own 2 of them, and if anyone knows what I should do about it, I would like some advice. But here is Mr. Price. Same chart from earlier. We've got a PE of 23, a forward of 19, a mean of 18, and we're expecting sales growth of about 8% for the next financial year. That means it's actually not that eye-wateringly expensive, notwithstanding it's doubled in 12 months. It's not cheap. I mean, a year ago it was cheap. It's not cheap anymore, but it's not crazy expensive. It is just remains a challenge, and that's a problem for our miners, particularly our bulk commodities. It's not a problem with PGMs and gold. You put it in your pocket, you catch a helicopter, you no worries. But you've got a ton of coal. It's a little bit harder to get that ton of coal somewhere. Transnet is definitely improving. We've got the deal with Pier 2 in Durban, where 51% will be managed by the Philippines. It's currently going to court. We're getting Grindrod bringing their locomotives back from Sierra Leone to put them onto tracks in South Africa. Things are picking up. You speak to Andries van Heerden, they've got the one division, what do they call it, which sells like not aggregate construction division, construction materials, and that thing's doubled a year ago and did 50% growth this year. You say to Andries, who's buying? Transnet's buying. Their big customers being Transnet. Stuff is happening, but it's slow, right? It's always going to be slow. This is Bitcoin. So we've got the ETFs back in January. We had the halving in April. Nothing happened. We had the election of Trump. Kaboom. Bitcoin went to the moon. I'll touch on why in a moment. The important point here is look at Bitcoin. It gives you nice and easy places to buy if you want to buy. Is Bitcoin a store of value? No. Is it a currency? No. What is it? It is a geared option on equity markets. When markets go up, it goes up faster. When markets go down, it goes down faster. End of story. It's not saving anything, never mind the world. And with all of that, I own some, because you know what? I like stuff that goes up, and Bitcoin goes up. Commodities. I don't want to spend too much time here except to say that the top left are the bad ones: iron ore, uranium, wheat, palladium, coal, Brent, WTI, platinum. The good ones, natural gas and gold. If you're bullish on commodities, there's 2 spaces by the Satrix Resi ETF, or there is an AMC, which is called the Coherent Global Commodity Investment Portfolio, CCMGCZ. It is actively managed, and EFAF manages it. Or go and buy an individual if you particularly like. This is gold. The story behind gold is quite simple. Countries are scared about the dollar. Remember, Trump tweeted at BRICS weekend before last. Was it last weekend, this week? I forget, a weekend, threatening BRICS if we have a currency. What we saw, central bank buying started in 2018 and hastened in 2022. 2022 was the Russian invasion of Ukraine, and Russia suddenly realized that all of your dollar-based money that you have in the bank, you can't get to it when you upset America. So people like Turkey, China, Russia, India have all been buying gold. Weaponization of the dollar. It will continue. Gold is going higher. How much higher? No idea. Higher? Absolutely. Here are your gold stocks. There is gold at 23. Goldfields down because there's no dividend. DRD, Anglo Gold, Harmony, and there's Pan African right at the top. I, in my infinite wisdom, at some point switched out of Pan into Anglo Gold Ashanti. In theory, they should all be doing well with gold. I have a worry about the miners, and some to bigger or lesser degrees. Anglo Gold Ashanti's just bought this Egyptian mine with equity, and there's always deal risk. Pan-African's buying a pile of gold in the ground 1,500 kilometers south of Darwin. And if you know anything about Darwin, Darwin is in the middle of nowhere. And then you drive 1,500 kilometers to get to your gold mine. The problem they've got is inflation. Inflation isn't quite going away. Yes, the price helps them, but which is moving faster? Goldfields' problem is, and the big problem is new mines. So Goldfields got a new mine up and running 15 years from discovery to production. 100 years ago, it was about a weekend to do that. In the 70s and 80s, discovery to production was about 2 to 3 years. Now it's just 15 years. And that's not it. The World Gold Council suggests that the average is about 13 and a half. This is Brent. I expected it to go higher. It is breaking lower. OPEC has no control. It's not going to get any better in a hurry. Oil is going lower, which is great for us. Pan, the one I don't own. So, I mean, they're all good. I mean, Harmony, I mean, if I look at the chart, I don't like Goldfields. I've never been a Harmony or Goldfields like. I've always been Pan or Anglo Gold Ashanti. Pan's the spicy, sexy. Anglo Gold Ashanti's the responsible and mature. I switched. If you buy me a beer, I promise I won't buy a Pan. This is oil. So, in a world where growth is going to slow, not collapse, but slow a little bit, and where OPEC has just lost control, and where Trump's mantra is drill, baby, drill, we're not going to see an $80 oil price next year, which is great for us because if we got petrol cars or diesel cars, oil lower is lacquer. And then someone's going to ask me about Sasol. So there is Sasol. You know what I like my charts to do? Bottom left, top right. You know what that's not doing? Unless I've published it upside down. It's going top left, bottom right. Will Sasol turn? Sure. Where will it turn? I don't know. Maybe it has. Maybe, I don't know where it'll turn. I just know that everyone loves Sasol, but they're all selling it. So someone's lying here. Everyone I interview, everyone on my Twitter stream, there's two types of people. There's folks who say, like me, meh, not touching it. And then there's other folks who are like, this is the best thing ever. Have it as the biggest position in their fund, etc., etc. But then who's selling? I don't know. I mean, I don't have an answer to it, but I would tell you that is not something I want to hold. If Sasol is going to $600, as someone told me this morning, that's cool. I'll buy it at 200 and triple my money. I'm not going to buy it at 93.41 and lose my fingers. And this is platinum. It's gone nowhere in basically a decade. That is palladium. It's gone nowhere in a little while, but it's basically back where it was a decade ago. The World Platinum Council will tell you that there is going to be a shortage of platinum next year. Heard that story before. It hasn't helped. The green energy economy, platinum is going to save it. I don't see any evidence from that. The G7 is going to embargo Russian palladium. I don't see any evidence of that, and Trump quite likes Putin, so that's probably off the table. EV adoption is slowing, and we're moving to hybrids. Sure, but I don't see it in the PGM prices. I'm just staying away. Again, show me something that's doing something interesting. These are Implats 13, Theresa 11, Northam down 21, Sibanye down 24, Anglo Platinum down 36. If you have to buy a platinum miner, first go for a run. And if you come back and you still have to buy a platinum miner, don't buy Anglo Platinum. Because Anglo American still owns some 68%, and they're dumping that into the market sometime next year. And when they dump it into the market, there are going to be a lot of people who are like, I do not want this thing. What is it? Please throw it away, good sir. If you must own platinum, I appreciate you could make an argument it is the best platinum miner, but don't buy it because it's not going to help you. So Trump is a weird one. So firstly, he's a second-term president, which means he's a lame duck because he can't run again. The midterms in 2026, post that, he is basically out of the game. Although with Trump, I mean, the short answer with Trump, expect lots of shouty tweets. That I know to be true. The rest is a little bit difficult. Will he bring peace? Will he impose tariffs? Will he deport 11 million people? I have no idea, and neither does anybody else, to be perfectly honest. What he cares about is staying out of jail. Fun fact. So the man who lost the last election and then invaded the state capital to try and overturn the legitimate election, then wins the next election and had the charges for invading the capital to overturn the election withdrawn. Yeah, I didn't understand that either. It's American politics for you. What he wants to do is stay out of jail, have fun, do some shouty tweets, threaten people, etc., and hang out with his buddies. What matters is therefore his advisors, and what then matters is what do they want? Lower taxes for the rich and for corporates and less regulation. That is your Trump trade. Less tax, less regulation. Where we go, I want that one. There's a tweet he put out today. Basically, if you give America $1 billion, well, there's no EPA, no environmental authority, just go do whatever you want. I mean, he tweeted it. I mean, sorry, it was yesterday. I mean, except for the part that he tweets a lot, right? Remember Kofifi? Like who actually knows? But your Trump trade is less regulation, lower taxes. Where are we going to see less regulation? Crypto. Okay, sure. But that's going to be in the altcoins, and stay away from the altcoins because they're absolute rubbish. Where else are we going to see it? We're going to see it environmentally. Who's going to be a big winner? Tesla. Because what Elon wants is to get his full self-driving cars onto the roads legally countrywide. Trump's going to be like, yeah, sure, why not? Now, I mean, maybe they're good, maybe they're not, I don't know. The problem is, make no mistake, if you look back at Trump's first term, what happened? He started the term with a team of friends, and then he lost them all. And he got new ones and lost them and got new ones. To when he ran this time, only 2 of his friends from his first term said that they would vote for him this term. Every other one was like, no, man, I was close to that oak. I'm voting for the lady. I'd even vote for the old man. So at some point, him and Elon break up, and then all bets are off. But your Trump trade is lower taxes, less regulation. And to be clear, not lower taxes on billionaires, because the trickle-down theory has been fundamentally disproved. Reagan lied to us. Money does not trickle down from billionaires. When you cut their taxes, they don't employ more people. They go and buy more art and boats. They don't even buy wine collections. I mean, they're just like, billionaires are boring. You give me $1 billion, I would be fun. So China's interesting. So I chatted with a chap, and his name escapes me, from Prescient China. And he made an interesting point. He said that the Chinese people quite like Trump because he's transactional. Whereas Harris would have arrived with a political viewpoint and said, non-negotiable. Trump will go and say, hey, look, if you book some rooms at Mar-a-Lago, maybe we could, and I'm being serious, the Chinese view of him is that he will transact and he will do deals. Is he going to do tariffs? Yes. Where is he going to do them? China's an easy one. Canada and Mexico, he can't do, and that's just stupid. Europe, we will see in time. I mean, it's just going to be as messy as hell. But let's be clear, China's not lying down. Last week, China banned the export of 2 of the 5 rare earth metals. The one China produces 90%, the other they produce 82%. Now these rare earth metals are actually not that rare. We can find them in other parts of the world. Their names are like geranium and gelongium or something. I can't pronounce them or spell them. And China has banned the export of them. Now we can go and find alternatives. And there has been some stockpiling happening. But it does mean there's a shortage for probably the next 2 to 3 years of some of these rare earth metals. So when China comes with tariffs, maybe Trump comes with tariffs, maybe China says, nice computer you don't have there because no rare earth metal. How about we make a little deal? China, the disappointment of 2024. I didn't expect a lot. Consumer confidence in China has vanished. Why? Because their property market has disappeared. And it's weird, there's lots of things that make us feel rich or poor or something, but property is one of them. And when your neighbor sells a house next door for more than you paid for yours, you feel smart, you feel rich, you feel confident. What we've got in China is people who paid for flats 8 years ago, haven't got the flat, and now the neighbor's flat you could buy, it doesn't exist yet, you can buy it off plan for 40% the price that you paid, and nothing's been built. So consumer confidence in China has vanished. The stimulus promised on 24th September was modest. It's important to us because commodities, we need them to consume commodities because then our markets go up, our rand goes stronger, we get more taxes. But if I had one wish, if I had one wish in the geopolitical sense, global economic, it would be for China to be doing 7% GDP, because then commodity prices are through the roof. Our miners are, excuse me, making a fortune. Our JSE is through the roof. Our rand is back at 12, and our treasury is getting $200 million extra revenue every year from taxes and dividends. I just don't see it happening. I mean, that's the bad news. The questions, are they the next Japan? Low to negative inflation, modest growth. The jury's out. Tech in China. So NVIDIA is worth 2.5 times all China tech. China tech is cheap, but being cheap is only half the story. The other half is what makes it go higher. Buyers. No one's buying China tech. Europe. I'm just tired of Europe. Like I keep on saying buy Europe and then nothing happens. I'm going back to the cheese, the coffee and stuff. Fun fact. So TSMC, who build the iPhones, the chips and everything in Taiwan, have just built a plant in Arizona. It goes live, a fab, in I think early next year. They've built an identical plant in Germany. Because everyone is saying, you know what, we want to reduce our reliance on China, on Taiwan. We want to onshore product. They've built an identical plant in Germany that they built in Arizona, but no one talks about it. Go Google TMC Arizona, you'll get thousands of hits. Go Google TMC Germany, a couple of dozen. Their problem is energy. Their problem is aging population. Their problem is that Europe's a lovely place to go, but they don't seem to work. I don't know. So this is the Euro Stocks 50. I mean, maybe it breaks higher, but you know what? Fool me 4 times. You're not going to fool me a 5th time. So I am not doing Europe. Holidays, yes. So some predictions. Gold, more all-time highs, easy. $3,000, easy. Gold is going higher. We're in a world of potential inflation. We're in a world of a weaponization of the US dollar. We are in a world of uncertainty. All of that says people will buy gold. How do you buy gold? You can buy gold in of itself. It's a little bit boring, only 23% up in ZAR this year. You can go and buy a gold miner. Pick your gold miners with caution, because some of them didn't do any return this year, looking at you, Goldfields. But I think gold has still got space, and I think potentially lots of it. I think local GDP can hit 2%, and that is my head in a block. It's also going to be difficult to measure because by the time I do this presentation next year and mark these predictions, we won't yet have Q4 GDP out. So we won't know where we are. But by simple math, load shedding was 1%. Two-pot adds another 0.5%. We're at 1.5 already. Our base rate is about 0.5. That's 2%. Look, our president said 3.25. I did a podcast a few months ago where I said 3% was achievable. It absolutely is. But I think we can do 2% GDP for the first time outside of pandemic in over a decade. And that slowly starts to unwrap some of our structural problems around unemployment and poverty. But the operative word there is slowly. 5 or 6%, then things are cooking. So I think we can do local GDP at 2%. I think the rand will be stronger, sub 17 by year end. I think it'll go easy 1680 probably in the next couple of months. I think we get off the grey list. I think that'll happen in June. There are literally 3 boxes left to tick, and we will tick them and we will be off grey list, and that will be important. We might even get a ratings upgrade. Of course, that just, as I said, makes us 2 levels into junk instead of 3. I think we'll get prime from current 11.5, and I think the Fed rate goes to 4 from current 5.25 to 5. I am not expecting lots of rate cutting next year. I think that this rate cutting cycle is going to be shallow. I think that central bankers the world over are going to start pausing. The futures market in America is currently giving a 26% chance of a rate hike in America next year. I don't think that's happening, and 26 is not the best odds in the world, but I think that I'm not sure inflation's over. Let's put it that way. I'm not saying it's going back to 6, 7, 8, or 9, but the US isn't yet back at target. Europe isn't yet back at target. So I think and we don't know what the orange one is going to do. So I think in an abundance of caution, I think we're going to start to see central bankers pausing. We'll get a couple more cuts. We've got FOMC next week. We've got our own in Jan. I think we'll get 3 more 0.25% cuts, and I think the US will see the same. And then I think we pause at 10.5, which is a terrifying number. But hey, just for reference, the old folks will appreciate this. When my wife and I bought our first house in 1998, prime was 26%. You youngins complaining about 11.25, 26%. And we bought a house. Of course, we couldn't eat. I think we'll have a green year in the top 40. I think we could have another good year in the top 40. I think a double-digit return is absolutely possible. And I don't mean double-digit as in 99. I mean double-digit as in 15 or 20. I think the US market is going to show some weakness. I think it will close green, but I don't think it's going to do great. I think SA top 40 will probably do better. US market is just expensive. There's going to be volatility. And I mean, if NVIDIA just does one little miss, NVIDIA loses 40%, that takes the S&P down 10. And that could happen Monday before tea time. Afternoon tea, because America wakes up late. I think our local inflation is going to stay under 4.5, and I don't think US is going to get to under 2. And that is why I think rates are going to start to pause. I think Trump will do some tariffs. I think it's not going to be as big or as crazy or as wild as he has said. But truthfully, if you are the global bully, and to be clear, I mean, he is, and he's America, so he's got stuff to back him. It's not like you know, I don't know, in the days when Robert Mugabe used to try and be the global bully. It's like, sorry, we've forgotten who you were again. If you are the global bully, sometimes you've got to actually follow with your promises, right? That kid at school was the bully. He actually had to throw someone off the balcony because otherwise no one believed you after a while. Okay, a lot of you looked at me squiff. I wasn't the bully, and I'm not suggesting you throw people off the balcony, to be clear. But you've got to, you can't just say, I will. Sometimes you actually have to do. So I think we'll see some tariffs. I think China's the easy one. I think when he threatens Mexico and Canada, it's a fun fact, Trudeau had to visit him in Mar-a-Lago because felons can't go to Canada and Trump's a felon. Fun fact, felons can come to South Africa. So he can come to the G20 in Santa next year. I think our local government bonds are going to go sub 8%. Foreigners love them. The risk is 0. They can hedge out the rand. It's a highly liquid currency. Currently, they're about 9.2. That's a 120-point move. That's big in bond market. Save our government billions in debt in the years going ahead. I think load shedding stays gone, but I think water gets worse. And those are an easy one, particularly the water. And I think the GNU survives. I think the problem with coalitions, because it's not a government of national unity, it's a coalition. The problem with coalitions is that two enemies get together and do good, and their voters suddenly can't tell the difference. And we saw it in the UK when what was it? Lib Dems, thank you. The Lib Dems went in, and the Lib Dems are now finished. Because everyone's like, yo, we voted for you, and then you went and joined the enemy, and we can't tell you apart. It's just more men in suits. This is confusing. I think it's been very strategic here in South Africa. I think the DA has been, so the ANC were clever. They invited everybody to the party. Yes, Gayton, we're looking at you. The DA is playing it clever in that the DA, so the key thing with coalitions and the key thing with negotiations is you don't go to the press. Now, who's going to the press? anonymous people, and the Premier of Gauteng. I know, it's awkward. But the actual principles, the people who are sitting in cabinet, the people who signed that document during a toilet break in Parliament earlier this year, they're not going to the press. And yes, we are seeing screaming stories almost weekly in the media about how this GNU is seconds away. They are always unsourced stories. These are planted. I moonlight as a journalist sometimes. And when someone phones me with a hot story, my first question is why? Why are you giving me this hot story? What's in it for you, for me to break this story? What do you get out of it? So this one on the weekend, which was about, I think, was it our education minister or something? All the do, but no sourcing. That's someone in the background trying to play puppeteer. What we do see on the issues that really matter, like NHI, there's no Steenhuisen waving big threatening sticks and stuff. They're getting on, they're doing their job. It's also, if the GNU fails, and we get a progressive, and I use that, I can't, we get the MK and the EFF who call themselves the progressives. Maybe they'll get a dictionary for Christmas. They do a deal with the left. Everything I've spoken about is just off the rut. It's just, it's gone. It's out the window. I mean, what is the MK party story? Eat at the trough, with all the respect. I mean, that's all their story is. Nothing else beyond that. MPs were depositing their 10,000 Rand a month into Zuma's personal Capitec account. I love that he has a Capitec account. No gold card for Zuma. No, I got Capitec. It's good, it's cheap, it's nice. The queues are long, but you know, the GNU survives in spite of it all. Because actually, what does South Africa have? Mature politicians running our country, and they know that if the GNU doesn't survive, it'll hurt the DA immensely, it'll hurt the ANC immensely, it'll just be an epic disaster. So is our coalition Germany, where Angela Merkel ruled for 15 years and she never had more than 32% of the vote? Or is it Italy, 53 elections since World War II? So far, we're better than Italy. The average Italian parliament didn't last 6 months. We're almost at 6. So maybe we're Germany. Let's hope. So some stocks. The first one's a bit of a cheat. These are actively managed certificates. There are 3 of them. One is Keith McLachlan. He did last month's Power Hour. The other is Adrian Seville, and he did October's Power Hour. And they both. And then the third is Denker Capital. I put Denker there because so you can't accuse me of just favoring my friends. But if you're going to buy one, favor my friends, right? I mean, come on. They're all focused local, and not the megas. I mean, they're not SA Inc., but they're staying away from the big caps, which means they're playing in SA Inc. And well, they might go and buy, I suppose, and they could buy Richmond or something, but that's outside of what they're trying to achieve. Returns have been solid. Fun fact, Keith runs a local and an offshore, local beating offshore. These are just a nice, easy way to get active, I stress active, investment. They do not go in tax-free accounts because they are active, and actually not because they're active, because they can't go in tax-free accounts. I like gold, still holding gold for the year. I like Advotech, compelling story there. They did a great presentation about 2 weeks ago. I didn't go to the presentation, but I downloaded it from their website. People are a little bit richer. They're going to be paying their school fees if they're in arrears. And what's the one thing that families want for their kids? Better education than they had. And yes, there are some schools out there where you can pay R250,000 Rand for 1 year of high school. I went to school, it was $10 a term. But for a lot of people, R250,000 Rand for one kid, for one school is like a lot of money they simply don't have. Advotech, and they're all good. Advotech is head and shoulders my preferred in the space. Mr. Price or Foschini. And some of you are going to say, yo, dude, that Mr. Price is really, really, really expensive. Okay, well then buy Foschini. And maybe if you want Pepcor's another option as well. I put those 2 there because I hold them at this point in time. I don't hold Pep, but a clothing retailer, but not Truworths. Any clothing retailer, not Truworths. Tesla. Why? Because him and the orange are best buddies. And as long as that happens, he's going, I mean, all Elon Musk wants is to be loved like any other crazed billionaire. We've all seen the movie, right? The Eiffel Towers and nonsense like that. The other thing he wants is lots and lots of money. And how does he do that? Strip regulation. So, I mean, SpaceX, 95% of their income comes from government, and they're going to get more of it, and Boeing will be squeezed out. But there's a lot of regulation that gets in the way. Like there's apparently penguins or birds that get hurt with takeoff, and Trump's going to be like, yeah, turkey, no bird worries. I mean, that sort of thing. So Tesla will, SpaceX will be able to do more liftoffs. Tesla's going to be able to get away with a lot of stuff. I mean, their full self-driving version 13.2 by accounts is really, really good. They have got more miles driven than anyone else because they're recording every inch of every drive of every car. And until that bromance breaks, this is not fundamental reasons. It's got to go back to. I like stuff that goes bottom left, top right. And I think Tesla can do it. Spur, a little bit of money we're going to go spend. Where do you spend? You spend at Spur, particularly if you've got kids. I haven't got kids, I don't go to Spur, but it counts. It's exactly the same as it was 20 years ago, except they took away the salady thing. Apparently it was bad health.
Sorry, the one right at the top,
yeah,
the local stock, isn't that UUGS?
No, that's global. This is local. There's two. Yeah. I like Spur. Famous Brands is looking good too. Spur has no debt. Always good for that. Southern Sun, we're going to be having foreigners coming in. We're going to be having G20 next year. We're going to be having holidays. You could also get Sun International. Problem there is the Sun Bet, and please, 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 I hope that we start getting some regulation around gambling, like ban online gambling, except for poker. Other gambling, ban it, all of it. City Lodge, if it eventually ever does break out, yes, but so far it doesn't want to break out. Coronation, because if markets go up 18% as they did this year, Coronation just makes 18% more money. And then they paid all its dividend. And imagine if they're good at what they do and they actually manage to do 20%, and so they charge some performance fees at the same time. This is just rising markets lift asset managers. Thank you for playing. And they've got rid of their SARS issue. That's now behind them. They've also got a 51BE accreditation in the last week, which means they can start getting massive allocations from PIC and other such areas. So Coronation. Calgro or Baldwin, these are my dicey ones. Calgro I hold. They build very low cost housing, and there's going to be huge demand for that. Baldwin builds the higher cost million into 2.5 to 3 million. I hold Calgro because it's going up. I don't hold Baldwin because it's been going down. At some point it turns, but my preferred is definitely Calgro. They are small, they are illiquid, they bounce around, they are at times scary things to be owning, but people want to own houses, lower rates, two-pot money, lower inflation. People are going to be buying houses. Uber, not the motor car, the home loan people. Was it an 18% increase in home loan applications in November? Now, what we need is the banks to start opening the taps, but I think that will start happening too. Purple Group is highly speculative, but I own it so I can put it there. Again, if there's more money out there and markets are rising and we've got two-pot, Purple clients are going to be growing, putting more money in and buying more shares and earning revenue for Purple. And their non-loyalty program, Thrive, nets them about 40 million a year. They'll get to a point where that thing covers their base costs. Yeah, I know. I was going to say it was a dodge thing he did, but that would be polite. Point is, at $1, I think they've got some upside. They are insanely illiquid, so handle with caution. Combined Motor Holdings, we buy cars, same story. You notice the trend here, very much saying, hang on guys, SA Inc., but SA Consumer Inc., Hudeco, Invicta, brilliant companies. Sure, absolutely, loads of them, but I'm going right to the coalface where the consumer sits. Combined Motor Holdings, new cars, we buy cars, second-hand cars. Second-hand cars booming. Used to be for every one new car, second-hand was 1.12 second-hand cars, it's now 1.44. And for someone who's in the market for a second-hand car, most cars are expensive. Like for $1 million, you don't get much. I'm not spending $1 million on a car. Like that just seems silly. Someone could just steal it. At least $1 million house, they can't steal it. Like it's attached to the ground. We Buy Cars is fundamentally changing the secondhand car experience. If you've ever bought or sold a secondhand car and you had to go to Elof and meet some guy called, I'm not going to give a name because it's somebody's name here, it was not fun. They've totally changed the game. ASML. So is AI still ongoing? I mean, ChatGPT launched Sora on Monday. Text to video. You type something and it makes a video. It's quite short. Its quality is not very good, but the AI story is still in very early days. It's going to get wildly more. Now, in video, sure, they make the chips, but they're the shovel maker. ASML makes the machines that makes the chips. And they've got this technology called ultraviolet lithographic or something like that. And they're the only people in the world who have it. If you want to do a high quality chip, not a 14 nanometer or one that goes in your car, a proper chip, a 3 nanometer, a 2, if we haven't got to 2 yet. If you want to do a proper fancy chip, first you got to phone these guys and then you got to build a fab. They've had some results that didn't impress the market, so the price is under pressure. I love it when a company that has, they're the only people who do ultraviolet lithography 3 in the world. And they have a bad 3 months and like the share price drops 40%. And I'm like, but they're still the only people in the world. So I buy them. Peter Lynch says that. When do you buy a retailer? When they have a terrible set of numbers because they messed up their merchandising. And we've seen it with Mr. Price. Every couple of years, Mr. Price stumbles, gets merchandising wrong, results are bad, share price falls 30%, you buy it, you make money. And buy it on the way up, buy it because the logic is they'll get back to good again. They made a mistake, it happens. They'll get back to good again. That's why I like ASML. So as I say, strong focus there on small SA Inc., ergo high risk. Your tax-frees, your ETFs, nothing. Keep them as they are. Keep on keeping on. We'll be back in the new year with our next power hour. It will be ETFs, it will be tax-free and everything in between. That will be next year. We have no more events for this year. I only have 2 more radio shows. My holiday starts at about 7:30 on Friday morning. I am so close, I can almost taste it. Thing is to have holidays, have fun. All pictures here for the entire year that I've done have been done with DALL-E 3. It's gotten better. The beginning of the year, it couldn't do fingers. It can now do fingers, more or less. It's still weird. If you don't want a white man, you have to ask for it. And then if you ask for certain genders and races, it comes at you deeply stereotyped. But it's so this was, I just wanted fireworks over city in watercolor. I think it's quite pretty. And that's it. I'm going to leave it there. I'm not going to take questions. I've run my time insanely. I'm going to end with a few quick things. Thank you to Standard Bank for the year. Next year, we will put our foot down with some shabalala. Someone here knows his number or his neighbor and can say, dude, Simon's in. You can't do this to us. Huge thanks to Adishan, Palesa, Christine, Bonolo, who's not here, who've helped us arrange it. Massive thanks to you folks for coming out, for braving everything that it takes to come out in a post-pandemic world, particularly when it is raining outside, which is both cool and wet, but we'll take it. So look after yourselves, and if you can, look after somebody else as well. Thank you all for your time.